Okay, welcome, my people. Good morning, good afternoon, good evening. Now let's discuss like traders. I want to spice up things this morning, today, give you something that would make your day wholesome. I want to share two different attributes, the cycle method and the mirror effect. Okay, we'll start with the first one, the cycle method. What is the cycle method? Just like cycle method simply implies that whatever starts at a point, at a spot or point, if it goes up, should come down to that particular level. Again, if it comes down, should return to that level. Market people gave it a different terminology. They say this one is double bottom, this one is double top. Okay, but I want to give it a different name because what we are going to learn today is advanced compared to just double bottom and double top. This is looking at it in cycles like a swing. Okay, so the cycle method is simply saying that this is where price originated. It gave us the bullish momentum. Okay, once price took broke the structure, or in other words, structural low, I was anticipating what should happen. It should mirror this bullish market structure down to the base, which is somewhere around here. It's not really at the bottom, somewhere around here. It just tapped it and came up. So the cycle method is if price takes the last buyers, the last guy who started the buys, we anticipate it to mirror it coming down. The only difference is that this one, the mirror property of this effect is that it did not come very strong. It was weak. And if you were watching all the forecasts, you understand why this bearish move was weak. If you've been following me, you will understand what I talked about, which is very simple. Okay? Let me use white this time. Let me use white this time. Just a minute, please. Cycle method and mirror effect. Okay, I think this should be beautiful. Beautiful. Okay, so what I'm trying to say is this. If you've been following me, the forecast, you would have understood that I gave, right, we talked about this, that we are generally in buyer's territory, however, holding a seller's territory. So we are in what we call a cocoon, okay, or a cocoon, where price is looking to go up. However, the current territory is down. So this up that was happening here was just what you know as retracement for the bearish guys. Now, for it to come down, it has to also respect the OG sitting down here. Okay. Now it's coming down with to respecting these 4-hour cells. Okay, this 4-hour cells is what I would refer, though I've not introduced this concept, is what I would refer as the new money guys. They are the ones that held price from coming up, respecting this buy momentum, this buy volume. And when it was coming down, the buys were the one holding this sell from playing smoothly. If not, it could have just played. Well, look at this. Because there is no buy here. There's nothing holding it. What did you notice? Kaboom. Because there is no demand zone again. It has violated the demand zone. Immediately cross below here. Every other move was just like cutting, using knife to slice a let's say butter or cheese, just as easy as that. Okay. So the cycle effect is simply price. If it takes the structural low, it tends to mirror whatever price action did going up, it tends to mirror it coming down, which is what it did here. Okay. This is what I would refer to as the cycle effect or the cycle method. Is a method actually because it has life and blood and all the other condiments. Okay. Now, after I've discussed the cycle method, let us look at the mirror effect. The mirror effect is just like an extension of the cycle method. What do I mean? Extension being the mirror effect can appear like a cycle method, but is a mirror effect. The only difference between a cycle method and a mirror effect is that cycle method, you know where you are going to, which is trying to do what? The cycle method is trying to mirror whatever price is going up, is trying to come down. So you see that it's like one hand washing the other hand. Meanwhile, the mirror effect is simply mirroring, just repeating what happened. The cycle method is a bigger structure. The mirror effect is more like the now structure. Whatever happened just most recent. Okay, that is just what I would simplify it. Now let me put it in action. Let me zoom in a little bit. Putting it in action, this is the concept of the mirror effect. Watch this. This was day before yesterday on the 29th. You remember we were taken out of this trade via the nipple week. Okay? The nipple week took us out. So what did we do? Very simple. Price dipped, did some sluggish movement, took us out. Okay? So let me do it this way to make it very, very simple. This is it. Price dipped, came up, took us out. Yesterday, 30th, and this is still London. Okay, what did price do? Price dipped, did not hit TP, did not hit TP, came up, almost would have taken us out, then hit TP. Came up the day before yesterday, took us out, then eventually it hit TP using the London volume yesterday. Then the TP for yesterday is what would have hit my TP for day before yesterday. You understand? So the point here is this. This action, this culmination of moves was repeated yesterday. This is the mirror effect. It just mirrored what happened. So it's more like an interim, a short-term kind of a short effect. It just happens now. Meanwhile, the cycle method is a big effect. In fact, for those who are English speakers, let me try to put it in English. The mirror effect is like a preposition. Okay, it connects one word to another word. Just it tries to just connect like off, on, he was by the pool, by being the preposition. Meanwhile, the cycle method is like a conjunction which connects one sentence to another sentence or connects one clause, maybe the main clause to the subordinate clause. So what I'm trying to say is that cycle effect is a big bridge, while the preposition, which is mirror effect, is a small bridge. So the mirror effect is it's more interested in the now, what is happening now, while the cycle effect is interested in the whole structure, the whole movement, okay, which is what we saw earlier, going up and coming down. Cycle effect 100%. This is what I call equal V or equal inverse V cycle effect. For the mirror effect, this is it. Price retraced, and after it has done exactly, let's assume that I could copy this and this out. what you will see is this. It did not hit our TP, went up. This one, this, it did not hit our TP, went up. And there's something else about this movement. There's something else about this movement which I want to discuss or talk about quickly. In both scenarios, they went above the structural high. This is the structural high for yesterday. This week went above it in both scenarios. Now, this is what most times you would not hear or see someone talk about, this mirror effect, but it occurs, which is why no matter how much you trust your strategy, this should be imbibed, this should be added to your strategy in the sense that yes, your strategy would work, but market could give you the middle finger like this and do whatever you want it to do after it has taken you out. I would not say it's the broker's fault or it's just simply market manipulation. This is what you call about volatility. It happens. So you get to just, you have to be used to it so that you don't blame the system. You have to adopt and adapt the system. Adapt to the system, adopt the system and adapt to it. Instead of just, hey, is my village people at work? Or is the computer, is the broker, is the market? Just adopt and adapt. There's something a friend I watched in a movie. The army brat said something, and I cannot forget that. He said, you have to improvise, adapt, and then overcome. Improvise, adapt, and overcome. I think I saw this in Undisputed 3, the movie. Undisputed 3, Boycott, and Jer Jericho, yeah, Jericho, the boxer, the mixed martial art fighter, and Boycott, the prison movie, by the way. So he said something to him, you have to improvise. This is what has happened yesterday. So how do I improvise? Okay, my stop loss has to go above this. By putting my stop loss above this, I am adapting to the fact that it could occur again. What happened yesterday could occur, as in that was me being yesterday now. This is me being yesterday. But now, since it's my yesterday, which was my today, is now okay, let me not make it very complex. What I'm trying to say is this. This was my yesterday, and this the day before yesterday. But as at the time I was analyzing and thinking this to adapt to it, it was my today. Okay, you know what I mean, but if you don't know, just laugh with me, okay? Okay, so this is the point. I adapted to it and it aided me to overcome. If I was stubborn to say no, let me put it up just above the resistance, I would not overcome this challenge. But because I improvised, which is taking my stop loss a little higher from just the structural high, which is supposed to be somewhere around here, I took it a little higher. I have adapted to it and it aided me to do what? Overcome this middle finger that it would have done just the same nipple week. It would have done the same thing. Then what did it do? Profit. This same one occurred, went up a little bit. The same middle finger thing went up a little bit. But by this, it has already given me my take profit. So if you had wanted to enter the trade on the break of this structural low, excuse me, it would have activated you, giving the middle finger. But this one now did not take the structural high because this is where my stop loss would have been now. Here. Then, but I just wanted to hit my take profit, which is this low, which is a cycle effect. Okay, so this is for GJ. We've discussed the cycle method, we've discussed the mirror effect. Okay, so for today, what I'm looking out for on GJ is very simple. Uh-oh. Okay, what I'm looking out for in GJ is very simple. I want to see, okay, it's already performing. I wanted to see some kind of retracement, at least a deep retracement, so that I could retest this low. which is the cycle effect, cycle method playing. But now it has already started dipping. Let's see how far it can dip. But whenever price has already dropped like this, you just have to wait for it to retrace. Okay, don't try to catch a falling knife. Just allow it to play. It could drop, but would you mind to keep your stop loss around here? Yes, this could drop, but would you like to keep your stop loss as it, because definitely it's going to retrace. So why don't you wait for it to give you our FVP, which is a fair value price, then you join the dump together. So what I'm looking at on GJ is simply price to come up a little bit. After doing that, we take the sell going down. So price could retrace and do what? Dump. So this is what I'm looking at. So this is scenario 1A, or price could just, whatever it's doing now, continue dumping. This is scenario 1B. But I'm not looking out for, my eye is not on any buys right now. It just, my eyes is just strictly focused on taking sales. Okay, so this is for GJ. Okay, the subsequent ones will not take us this long to understand. For gold, the same cycle method occurred. This time now, it occurred like a mirror effect. This is it. Price rallied, created support, kaboom. Price rallied. If you go to, you might not see the support here on this time frame. Let's go to a lower time frame. Look at it. Price rallied, created support, up, then kaboom. The same thing that occurred here. Look at it. Just the same mirror. And this time now this mirror effect is instantaneous, like I told you. It just now it happened. So it mirrored whatever I did yesterday. It just did it. Whatever I did it for yesterday, it did it yesterday. So this is a mirror effect. So if you wanted to take sales, it's somewhere around here, stop loss above here, and you have more than 3 arrow, at least greater than 2 arrow, excuse me. And if you check, it did not come directly here. It reached this demand zone, exactly what it did yesterday, day for yesterday. It reached this demand zone and started doing some retracement, reached demand zone, but this retracement was quite heavier than this, but it is the same point. It retraced to close to where our entry is. This one retraced to our entry and do what? Kaboom, it dipped. It's as simple as this. Okay, it could not be any easier than this. And if you check this structure, this horizontal structure was binding. We came up and eventually it made a new low, just like what you're noticing. This other one made a new low. So this is just what it is on gold. So again on gold, we have exhausted, we have gone really down, as in really down. So I would wait to see some retracement on gold. I don't want to catch a falling knife. Okay, but this is the overall target I'm looking at. Somewhere here is the overall target, which is a mirror effect. Okay, if this candle closes like this, then we anticipate more bearish momentum going down. Okay, so what we could anticipate is some retracement, at least to here, or even a deeper retracement to here, then kaboom. One area of take profit, another area of take profit. Okay, so this is scenario 1B, or yeah, then this is scenario 1A. I'm not looking for sales at the buys at the moment. I'm just more focused on sales. So this is what I have for you on gold. For Bitcoin, Bitcoin is playing beautifully. The same mirror effect, the same cycle method, everything is just playing out as anticipated. If you remember, I when we were giving the forecast yesterday, my interest was here. My interest was here. I said if price could break and close below this support, we are anticipating more sales. If price could break and close below this zone, this level, and you see this level was respected to the T, and this was something we drew more than 2 days ago or so. Just watch the forecast for yesterday and day for yesterday. You will see this level 19962.93, and we respected it to the T. So the point here is this: I wanted price to break and close below here to take more sales. But if you're waiting to see it on the 4 hours, you have to wait for complete 4 hours. So what you got to do is drop to 1 hour. 1 hour could maybe this first 30 minutes candle in the 1 hour closes, because I prefer using 30 minutes in Bitcoin instead of just 15. 15 did the same thing. Now the only way you can use 15 is if the 15 is in confluence with the 30 minutes. This is what I mean. This 15 minutes, 2:15. This is 2:30. This is where you'll be thinking of entering on 2:30. But in this 2:15, this is where you could have taken the trade here, somewhere here, like this. If you're using the 30 minutes, are you seeing that the 30 minutes and the 15 minutes is in confluence? This is what I'm trying to tell you about. This is a confluence I'm telling you about. I place the trade using the 15 minutes, and it's exactly the same thing on the 30 minutes. So this is the confluence where the 15 minutes and the 30 minutes are eclipsing one another. Okay. So what I was also saying earlier was that on the 1 hour time frame, we're in buyer's territory, and we want to see what price will do. Retest, to go and retest the high before we do what? Come down. So in a general concept, what I'm looking at is this on Bitcoin. I want to see I want to see price I want to see price give some deep retracement, break the structure, and we anticipate a rally to retest the high. Sales would occur below here because this is a demand order block or a demand zone. So sales would occur below this demand level, buy would occur anywhere within or above it. So it's as simple as this. Okay, I hope you've learned something new. Feel free to rewatch, because I'll publish this recording soon on YouTube. Feel free to watch it, learn something new, and if you have questions, don't hesitate to ask. I will respond as quickly as possible. And if you have not subscribed and hit that notification button, what are you waiting for? Go ahead, subscribe, hit the notification button, and last but not the least, okay, comment. The last but not the least is like. I hope I'm not asking for too much. Okay, so this is just it. Subscribe, notification button, comment, and like. In fact, going in this order is perfect. That means that you are a trader because you are doing things without emotion. But if you're emotional about it, still good, but you have to numb that emotion, because the market would. Okay, let me just give you a little advice at the end of this video. The market will make you feel like choking yourself. Okay, but whenever that thought comes, remember, the L you take is not a loss, it's a lesson. Okay, that L is a lesson, and depending on how you use it, that L could mean your Lamborghini tomorrow, could mean your Lexus. Okay, could mean a lot of things. So instead of just seeing the L, which is supposed to be a lesson, and your Lamborghini, see it like a promise of a better tomorrow. Don't look at it like a loss. This, which is why you have to understand the market, embrace it, caress it, F it, so that you get better. Okay, I'm going to stop here for now. All the best. Peace.